Hi guys, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 23rd of August 2020. Now, before I switch over to my screen share and walk you through a lot of the charts, a lot of the stocks and the overall market for the forthcoming week, I just want to address a couple of things just quickly off the bat, because I get a lot of messages, comments, emails, etc. why the analysis at the weekend on social media has dried up over the last few months. The reason for that is I'm just way too busy now. The analysis that you're about to watch takes me probably around 7 or 8 hours to prepare, record, edit, and obviously get out to things like social media, etc. And as it stands at this exact moment in time, I'm just way too busy to do these on a regular basis now. I do apologise to everybody that has obviously gotten used to the content being there every week. So I know many of you have had an incredible amount of value over the last couple of years, but unfortunately my time just isn't as available as it once was. So hopefully that just kind of addresses those questions, rather than sending individual emails, etc. back to everybody. I do appreciate everyone that follows. I know that the channel isn't massive, but I'm reliably told that it's one of the best stock market content on YouTube. So you know that's something that pleases me very, very much. Very proud of that. But as always, if you get some value from this, feel free to like the video, share it. If you come through on Facebook or YouTube or StockTwits, feel free to share the video. It all helps to kind of get the word out there, and there's a lot to be said for moving away from day trading. That's something else just to kind of point out right off the bat. I think if you have come through to this and you're looking to scalp, or you're in it for $1 or $2 moves in the market, you can probably just switch off now. You're not going to get any value from this. The time horizon that we work with is weeks, sometimes months. We've got a trend following based approach to the market. There are elements of swing trading, which I'm sure you'll probably pick up as well, but we're not trading on minute time frames and getting all these small moves, because it's pointless and most people lose. So yeah, no get rich quick schemes here. So let's dive into the charts. Let's see what the market's telling us. And again, let's hope the market continues on a rocket ship, because it's been incredible over the last couple of months. So let's get into the charts. So before I get into the charts, as always, please do pause the video. Make sure you're comfortable with that before watching any further. Basically says that I'm not a registered investment advisor, and for you to do your own due diligence and do not act upon any of these charts provided. Maybe to give myself a little bit of credibility, I think most of you that follow the channel and follow all my social media channels, know that I'm working my way towards my CMT at the moment. It's a huge deal, and technical analysis is something that I'm widely known for. And as I said at the start, if you get some value from this, please do just subscribe to our channel. So to get into the charts, the work that I have and what it's based upon is really just finding the strength within the market and to take advantage of mid-term trends. Now, there's areas of focus for me at the moment. When I look at something like the rotation graph, which is a tool that I use as a very significant data point for my work, we have leading areas, we have weakening areas, we have lagging areas, and we have improving areas of the market. Now, we don't want to be in areas of the market that are moving into lagging areas, because what the relative rotation graph is benchmarked against is the S&P 500. So if we want to drive outperformance in our portfolios, we need to be identifying strength within the market. So we want stocks that are moving into leading areas. So what areas should we be looking at the moment? I think cloud computing. I think we've got biotechs, which are strong. I think we can see energy is starting to fall off a cliff again. I think that's an area that drives a lot of inconsistency. I think you will have, temporary periods of time, perhaps 1 or 2 days, where we get these rallies, and then those rallies are short-lived. So we want to be moving into areas that are going to drive strong performance. And I think these are two areas at the moment that that we can look to take advantage of. Now, of course, there are many areas of the market that are moving into improving and leading areas, but those are just two that I wanted to highlight. Now, this is technical analysis kindergarten here. For those of you that don't know, the S&P 500 just went out at closing weekly highs on Friday there. Now, that is not a bearish development for the market. Now, I'm definitely not going to touch on or talk in any great length about the economy versus the stock market. For me, it's a nonsense argument. I think we just have to identify stocks that are going up. It really is as simple as that. I'm not really looking at the jobs numbers and the economic data that many will have you believe is important. Certainly it's important from a human perspective, but from a stock market perspective, we just want to be identifying the strong areas of the market. Now, tech has been absolutely massive over the last few months. The rally that we've had in tech has surprised even me, but again, this is a level that I've been keeping a very close eye on, and on Friday there, again, we have closed above that level. So from a risk management perspective, in my opinion, things become very easy when we start to break out into all-time highs. The only, I suppose, the knife in the bullish thesis at the moment, in my opinion, would be if we start to deal with things like failed breakouts. When we get failed breakouts, we can quite often get fast and aggressive moves going in the opposite direction. I mean, if we look at the S&P 500 here, where we had a failed breakout just prior to the market crash, and this, you know, again, for most of you that have followed my work for long enough, you all know by now that this was the signal for me to get out of Dodge, and that's something that I was communicating to our client base. And this is something that I keep very much an eye on. So for me, I think we just have to continue to be bullish unless price reverses and we start to deal with failed breakouts. I think that the Dow is moving higher as well. I think that's something that's very important. But something that I'm very happy about at the moment is the continuing decline in volatility. With the inverse correlation that we have with volatility and the overall market, what we see is when volatility is going down, the stock market tends to be rising. When volatility is spiking, the market tends to be going down, and that's something that we clearly seen when we had the market crash. But as we can see since then, volatility has just been steadily declining. Yes, we get these short-term spikes. It causes a lot of whipsaw action in individual names and stocks, but the key thing to bear in mind here is the volatility is declining. So for me, that's a bullish data point for the overall market. Now, most of you have probably tuned in because you're all used to the ideas, the charts for the individual names. I think I've got around 25 this week for consideration. I will move through them as quickly as possible. If you're somebody that struggles with technical analysis or stock selection, etc., you can stick around for a couple of minutes at the end once I get through these charts. But let's just get into them. Now, a lot of these charts, I should also add, have been requested for the forthcoming week through my social media channels, via email, etc. There's charts that I'm talking about where there's logical price targets, and there's some stocks where I think there is a potential for entry this week. So Peloton, I think, is one of those that might potentially be offering entry here. I think we're building a little bit of a base. I think we can see the Fibonacci levels here are very relevant for the chart. So for me, it's a bullish development that we're above the 261 extension level, and we're just now waiting for confirmation of a breakout, and I think Peloton will be super interesting. AMD, I don't know if I can say much more. It's had a monster breakout from $60. It's been consolidating, and I think AMD is starting to break out. Zscaler has been absolutely massive again over the last few months. Again, I think we are on the verge of another breakout here. The pullback offered opportunity. Some of you might know the term buy the dip. For me, I phrase it a little bit differently. I like to say that pullbacks in uptrends oftentimes offer opportunity, and I think that's something that we've seen recently with Zscaler, which again, as I said, has been absolutely massive, and I think we're close to breaking out again. Same can be said for Alibaba. We've had earnings. Earnings looked decent for me. I mean, I'll be the first to admit that fundamental analysis is not my game. I'm not the most knowledgeable man in the world, but I do think that from a technical perspective, if the fundamentals are aligning for you, the technicals are now starting to align as well. I think we're very, very close to breaking out, and for me, that would give it a $344 price target to aim for. Amazon again is breaking out. Again, it's amazing to me that 12th century mathematics has a place in the stock market. Don't ask me how it works, I have no clue, but it works. We can clearly see with the chart from Amazon that these levels are big levels, and this is one of the reasons that we've been bullish on Amazon since the breakout at $2,000. It's doing very, very well. Ultimately, I see this going to nearly $4,500, and I think it's breaking out again. And we have Facebook, I think logical target here. I think we're again breaking out, leading in the area of the market, communications. And yeah, I think there's a breakout and a target at 322, provided the market plays ball. I think that's the caveat to all of these charts. I think if we start to see massive declines in the overall market, I would happily revisit my thesis, because that's what technical analysis does for us. So I think we all understand that we can change our thesis on 5 minutes notice when we have new data points to consider and new data presented to us. So I think Microsoft, is very, very close to breaking out now. What does it mean for the overall market and for technology if Microsoft is breaking out? Well, I can tell you that it's not a bearish development. So, I'm watching Microsoft very, very closely, and I'm just looking for this breakout from a little bit of a consolidation pattern. I think we've got CrowdStrike, we've got earnings coming up in 10 days or so. And again, we're very, very close to breaking out here. We can see, again, that 12th century mathematics is holding true. So again, we're just waiting for that confirmed breakout, I think above 117, and I think CrowdStrike might be quite appealing. We've had a breakout recently in Mastercard. Again, it's trending beautifully. I think it's at the beginning of a new trend. I think we have recently, or we are looking to break out of a well-known ETF called iPay. So I'd encourage you to go and have a look at that. And that would be a bullish development for a lot of the card processors, etc. We've got Match.com. I think we've got a logical target here around 150. It is starting to move. It's had a good few weeks, had a little bit of consolidation over the last 2 weeks, but again, ultimately, I do see it starting to move towards these key levels. Beyond Meat, now I don't have any opinion of the company or the product, etc. I was asked about Beyond Meat this week, and I would have a little bit of concern here if we, broke below this key level here. It's not showing a lot of strength, and that would be a concern for me if I was holding Beyond Meat. Now, fundamentally, it could be a great company. Again, I default to what I said earlier. I have no clue. I pay attention to the technicals, and that's my style, and it fits me and my personality. I think if we break below this level, I think that's a potential problem there for Beyond Meat. Solar, if solar isn't on your radar at the moment, it probably should be. There's some incredible performance and outperformance within the sector, and Enphase Energy is one of those. very, very close to breaking out. I know there was a huge problem a couple of months ago, when there was a bit of a hit piece done on them. Again, I have no opinion. What I do know though is that the stock is moving and it's close to breaking out. So excuse me. Nvidia. Now, I taken a bit of heat on this actually a couple of months ago when I put my $600 price target on Nvidia when we had this breakout here. I had a few nasty little emails, which is par for the course for me. I don't need anybody's sympathy, it's what I sign up for. But again, it does look like that thesis is starting to play out. I think we've had decent earnings out the way, and ultimately I see this going to 620. We've got Docusign. Again, it's been consolidating over the last few weeks. Ultimately, I think this is just a standard consolidation before the stock is taking the next leg higher. I think one thing to say is I absolutely love their product. I use their product, and I see only good things, given that I see observations around the world, friends, family, etc., that are now starting to move to online remote working. I think Docusign have a massive role to play for a lot of businesses around the world, and early signals for me is I see a large adoption of their product. So I can only say bullish things about Docusign, and I think the stock is bullish as well, and the price is bullish. We've got Home Depot. I think we've broken out recently, and I think ultimately it's starting to make its way towards 374. The home builder ETFs as well, XHB is one that I think is showing a lot of strength. It's been driving a lot of outperformance. So again, I think Home Depot. We've got Square Inc. I think we've recently just broken out, and we are now on a closing basis. We are now above $150, which is a significant round number. So the expectation is that this starts to move towards $200 and hopefully $211. We've got Netflix. Looks like it's very, very close to breaking out. It's been consolidating. It's been a little bit frustrating, I guess would be the word for those that have probably been holding for the last couple of months, watching the rest of the market move off in a rocket ship, where Netflix has just been doing nothing, a whole lot of nothing. But I think potentially looking to break out here. So I think Netflix is going to be super interesting. We have Nike, or as we say here in Scotland, we call it Nike. Again, I think Nike has broken out here. I think it's starting to trend, and at the end of the day, it's one of the biggest companies in the world. I don't think it's going anywhere. Yes, there are areas of retail that are being hit, but I think the way that Nike are starting to move, and their business and how it's evolving, etc., I do see good things, and I think we're at the start of a new trend higher for Nike. NVTA, again, not overcomplicating things. I think we are breaking out here. There's a lot of upside potential in this one, in my opinion. This is actually one that we sent a trade alert out to our clients and members a few months ago, and it did incredibly well. I'm still bullish on this stock. I think PayPal looks like it's trying to maybe break out here. Again, I kind of just go back to what I was saying about the iPay ETF, where we have Square Inc., PayPal, Mastercard, etc. There has been a lot of outperformance in these areas, and again, I don't see anything bearish on the chart in PayPal. We want stocks that are going from the bottom left to the upper right. That tells us the stock is trending and it's paying us well. And this is the reason why I'm not in the market for $1 or $2 moves. We want to be in it for $50, $100 moves, because that's where the big money's made, especially if you're considering things like options, etc. Roku has been incredibly frustrating for most that have been holding, I think, over the last few months. Again, it's in this holding pattern. And the problem for me, again, mathematics from the 12th century, it works. There's an 18% range here. I would have concerns. I think if it was to break below 140, I think that would potentially be a level where I wouldn't really want to be taking any chances with the stock. But again, I'm not bashing anybody that I suppose dollar cost averages, for example. I mean, it's all valid. I just don't like the mental hurdles that come with that, and it doesn't suit my personality or risk tolerance. So I think Roku, it probably needs to break free of this little consolidation for it to be interesting for me at the moment. Starbucks, very, very, I think, frustrating chart again. It does look like it's potentially setting up here for a breakout. I think the 200 period simple moving average is a level to keep a very, very close eye on. We can see that there's a descending trend line. Again, this is not a coincidence that we're finding resistance at this trend line. So I think if we break above the 200 period simple moving average, and I think if we break above that trend line, I think that would be a level that we would want to maybe consider Starbucks. We've got Trade Desk. So I think there's only a few more charts to get through here. I think we've got Trade Desk. Again, it's had a monster breakout. It's been consolidating beautifully. I've been asked about this week, and I think provided that we are above this trend line, slight concerns. The trend line itself is actually quite a loose one. But again, I think if you're out there and maybe you're questioning, how far Trade Desk can run, you just need to default to, is it moving from the bottom left to the top right? The answer is yes. So you just remain bullish until key support levels are broken with the stock. Slack, again, we're just waiting patiently for a breakout of this trend line here. I think that level for me is around $31, $32, depending on where the breakout occurs. Again, I hear really good things about the product. I don't use it myself. We've got Nuance Communications. I think this is a very, very interesting one to me on a personal level. I think above $30, and it would make a lot of sense. We've got Pinduoduo, Chinese tech play. Again, it's done very, very well, but this is kind of going back to what I was saying before about the significant round numbers. It's not a coincidence that these $100 levels, the price meets a bit of resistance, it falls away a little bit, then it retests. So we know that the more times a level of resistance is tested, the more likely it is to eventually break. But I think when you're armed with the knowledge that these psychological numbers are very, very real, it's very easy to just tighten up your stop loss and protect profits as these key levels are approaching. And again, you can buy any significant dips here, and then it becomes more of a swing style trade. And I absolutely love these types of trades. And I think if Pinduoduo is now starting to move to the lower end of the range, I think you could probably look to buy the dip maybe around that 75, 76 level, and you've got a very easy get out if price breaks below. Again, technical analysis doesn't need to be complicated. And we've also got my own custom China tech index. I'm patiently waiting for a breakout here. These are the holdings for the ticker symbol, the code. So I'm just waiting for a breakout here, and then I'm going to hunt through these names to find the best stocks and the best charts to look to buy. But again, this is a significant level. Again, it's strange to me that this is an index that nobody else in the world has created other than me. But for some reason, these technical levels are respected. It's very, very strange, but it's not my job to question. It's just to act upon the information and to use it as a data point. So I think from my perspective, that's the analysis and the charts that I wanted to present to everybody this week. I know the analysis videos, I know there's a lot of you out there that love them. Again, I can only just go back to what I was saying at the start about just not having the time to create these and to build, edit, etc. But if you got some value from that, and maybe you would like to have access to content like this every week or twice a week, you might want to stick around for a couple of minutes. What I provide at honeystocks.com is very, very unusual when you look around the marketplace for charting research. I have a level of transparency with my work that I wish everybody had, and I'll walk you through what it is that we provide. But part of the I guess the platform we have is we do provide trade alerts, and this is a very recent example that we had. We sent this one out for Nvidia when it broke out here. Obviously we know it's up at $500 now, and it's doing very, very well. We've got NVTA, this is another recent one. Again, this is up at $30 odd now. Zscaler, which has been a massive performer. And we've also got Twilio as well, which is up at $250, $300 now. So that's a small part of what I do at honeystocks.com. But the reason a lot of my work gets attention is because I publish on my website absolutely every single trade alert that I have ever put out to our clients and our members. I don't know anybody else that does this, so feel free to go and have a look. Now, the one thing to say sorry, excuse me, is the charts that we have and what we provide, it's very much a quality over quantity approach. We provide at least 12 hours notice for any alerts that we send out. We provide a community, but it's very much quality over quantity. We're not calling out and sending email alerts for 5 or 6 stocks a day. I couldn't think of anything worse. It would just drive massive inconsistency. It's what day trading platforms do, and I do not align with those types of platforms in any way, shape or form, because I understand that those types of platforms, the approach to the market that aligns with short-term scalping, day trading, it just, in my opinion, doesn't work. It can work temporarily, but then ultimately what it drives is a massive underperformance. That's my experience. So you can use that information to see whether or not the types of stocks that we provide are appropriate for you. But we make a massive impact on our members and our clients' lives. We've got an incredibly high percentage of profitable traders within our group. Again, all that's published on the website. We do annual subscriber surveys so that I can see exactly what's going on and how everybody's doing. So again, there's Rob with $45,000 profit. We've got Terry there, beat pneumonia, and he had his best ever quarter after 10 years of trading. 12,500 from David, profit and options. So you can go onto our website and have a good look on our homepage to see exactly what we provide. But the good thing about the website now is there's no need to go and register and for back and forth emails, etc. before signing up. You can now go ahead and do it online. It's an end-to-end process now. But I think if you're looking to get away from day trading, if you're not driving out performance at the moment in the current environment, there might be questions to the approach. If you're looking to learn technical analysis, because at the moment we're currently providing full access to our technical analysis program, which we used to charge $1,500 for. If you're too busy to filter through thousands of stocks and you appreciate analysis like this that filters out a lot of the noise for you, if you'd like to be part of a successful trading community, everybody's super nice. And I think the other thing to say is that the charting is very, very clean. We don't overcomplicate things. and we make it so everybody can understand. So if you're looking for a bit more confidence, it's only $500 for an annual membership. There's a lot that you get with that membership. We're currently up at 185 members, so there are still some spots left. I would expect those to go probably within the next month or two. But again, if it looks appealing to you in any way, shape or form, go and hunt around our website and see if it's a good fit for you. We'd love to welcome you. So if you've stuck around to the end here, thank you very, very much from the bottom of my heart for watching, and stay very, very safe out there. Thanks as always.